All right, good morning. Today is October 20th, 2021. I'm back with another edition of the Wednesday live show. And as we speak, the S&P 500 flirting with the all-time high. Really close to the all-time high here. Actually, it's kind of actually looks like it's stalling out. Well, I'd say stalling out intraday so far, right around the prior high up here. What's interesting is that I haven't quite hit the intraday high yet. Just a little ways to go there, but the closing all-time high is basically within shouting distance here. There it is. There it is. So there's the all-time high right there. Um, yeah, and what's kind of amazing about this is that it's coming. This huge rally is coming on the heels of a pretty decent little pullback there. I actually did the math this time, and from intraday high to intraday low, which was about 5.6%. So it was a little more than a dip. It was a pullback. So we had this kind of, I wouldn't say it was real orderly, but it was it was an interesting pullback because it lasted basically for the whole month of September, right? It was like a 1 month. The high got hit a couple days into September, and then the low of that pullback was a couple days into October, and there's a lot of volatility here. You can see these long range days up, down, and so the market was kind of confused there, and then gap up, a little bit of a backing and filling, and then it just took off. And quite frankly, I don't even remember exactly what this was all about this particular day. I'm not even sure what the news was that day. Maybe it was the debt ceiling thing. I think maybe it was the temporary resolution of the debt ceiling that started this rally. And of course, this particular day here, you can see I got the 50-day moving average. So S&P closed above the 50-day moving average, and then the next morning, it kind of looks like a short squeeze, to be honest with you, because it took a month to pull back, 5%, and then all of a sudden, just in the past, 4 or 5 days here, it's just really sort of launched right back up towards the highs. And so the interesting thing will be to see, how much resistance it meets here at the highs. The thing about it is that, it's already kind of overbought just because of how fast it rallied here. So, let's see, the Qs, same sort of thing, but they're not quite as close to the highs. Very similar pattern though, and the recent rally here has been pretty significant. So, you can see a little bit of symmetry between what's happening now and back over here in March, right? Market sold off in March and bounced, but right there towards the end of March into the beginning of April, you kind of had a big, see that, like a 3-day sort of runaway move back over here. And so the market likes to do that. It likes to this sell-off in May here, it was a little bit more. It wasn't quite the big runaway to the upside move subsequently, but it was extremely persistent from mid-May all the way to mid-July. It was basically sort of a straight up, very persistent move. So anyway, take a longer look at some of this stuff. Now the Russell 2000. Let's see. I've got. Here we go. The Russell 2000 is still trapped in this box and is totally different looking than the other indexes for whatever reason, but it's still moving sideways. Now it's kind of working its way towards the upper end of this sideways consolidation. But as you can see, it's basically in the same spot it was back in February. And so Russell's kind of gone nowhere. Now, of course, it is up since the beginning of the year back here, right? And had a huge move at the very end of the year, last couple of months, and then sort of just ran up a little bit right in January, and then now it's stalled out, but we'll see what happens with that. And of course, the S&P is what I'm focused on. So let's go back to that. And yeah, I mean, just another little normal pullback. And this is going all the way back to the pandemic low, but interestingly enough, in 2021, we haven't really seen any significant pullbacks. And now, of course, as I mentioned last week, we're headed into the seasonally strongest part of the year. So it's going to be interesting to see. It's going to be interesting to see what happens from here. So, especially now that we're approaching an area of resistance here, it's just going to be real interesting to see how it sort of plays out right up here at the all-time highs. So it wouldn't surprise me to see a little bit of stalling out, and having to do a little bit of work. It's kind of I kind of get the feeling that this sell-off here, a lot of people got worried, and there was probably a lot of money that got maybe taken off the table, and/or participants that got short. And so what you're looking at here is like sort of a short squeeze, and maybe people chasing the rally, right? Because they got caught offside. Because it was kind of an unusual move that brought us back to the highs here. And, I think about all this time when the market was sort of selling off and acting poorly, and a lot of stocks were getting hammered. Now, of course, the S&P consists of a handful, about 7 stocks, about half the index. So obviously it's all about the big caps. But that's the way it's been for a while now. I mean, quite some time it's been all about the big caps. So anyway, since the last time we spoke, you guys know that AMD finally triggered in. Oop, I got to pick it off my list here. Yes, one thing that sort of bothers me about this particular charting platform is if I type a ticker symbol into it, it doesn't have my drawings on the chart. I have to physically save it to a watch list and then pick it from that watch list. But there you go. Pretty nice move on AMD. Triggered in the day that it broke this downtrend line and closed above this congestion area, and so far so good. Made a pretty decent move. It may have actually, let me take a look here, see what the target is on this. I didn't draw the target on this chart. 117.45 was the target, so there you go. So today poked at the target, which is good, because that's the idea here is that we set a target, and I'm going to go ahead and try and put that on the chart here just for the fun of it. So there we go. Close enough. Close enough. Let me save that. So there you go. Poked at the target, and the idea is to take some off the table at the target and let the rest run. So we still have, let's see, I believe the earnings are this coming Tuesday, so still have a few days of holding this ahead of earnings. The thing of it is that very likely, I will almost guarantee that this is going to get closed out ahead of earnings rather than hit the trailing stop, which is kind of unfortunate. Which brings me to another point here, is that there's some decent setups that are manifesting, but the biggest issue that we're facing right now is that literally earnings season is like really gearing up into full swing here, So any trades that get open now are going to get closed, before the company comes out with earnings, because we don't hold anything over earnings. And so what's more likely to happen is there's going to be less stocks hitting the pending list until we get through some of these earnings, right? Now I know this other pending stock, Johnson and Johnson. They just came out with earnings, interestingly enough. And so if a stock's on the pending list prior to earnings, then sometimes what happens is, and this is a little bit of an unusual case, but in the past what we've seen is that if a stock has like a positive earnings reaction, a lot of times it'll trigger in on that positive earnings reaction. So but this is still actually a pretty good setup right here, and so we'll see what happens. I mean, it wouldn't bother me to see some more consolidation here in this area. So that was the earnings react. It sold down pretty significantly, and then had a pretty decent earnings pop. But that earnings pop just basically recovered the most recent sort of sell-off there. So anyway, bigger picture on this, this has a decent chance of eventually triggering in and sort of cupping back up, right? So that's the big thing, is we're looking for sort of a change in trend. And you can see, let me pull up the RSI that I have underneath this chart so you can see. Yeah, Johnson & Johnson, J&J, got pretty oversold on this most recent pullback here, and deep oversold territory. And now you see that RSI is coming back and it's crossed back over 50, and so it's trying to poke back above the 200 day, and it never actually lost like these lows back here. These lows back here would have basically negated the potential for a swing trade on this, but it never did take out those lows. And so now that earnings are out of the way, I think that there's some potential here still. So, there's a bunch of other stocks that are kind of set up pretty well, but they have earnings coming out in the very immediate future. And it's going to be interesting to see how this earnings season plays out, because a lot of times what we see is stocks that run up into earnings, and that could very well be what AMD is doing here. Big pre-earnings run up or whatever, and then when earnings come out, be careful, because, well, I don't really see any earnings busts on this chart, but it happens. Stock runs up. This could be it right here. Stock runs up real big, earnings come out, boom, gets hit. So got to be careful on that. Let's see, the next one, I should say the other one that is on the pending list looks like it has a potential to trigger in today. So there's sort of the there's sort of the lows. I could actually, what might be nice here, whoops, this is one of the pitfalls of trying to draw on the chart on the show here. It's a little funky, but there you go. So, I had a horizontal line drawn there, which I just go ahead and save that. A little bit of an uptrend line. So this is actually looking pretty good here. The thing of it is, let's see here. Iron Mountain earnings on 11/4. Okay, so there's time for this to trigger in and make a move before earnings come out. So there's plenty of time, really. And hey, could get a decent little pre-earnings run up here. So we'll have to see. But that's the other one. So we got it's. I mean, it's kind of light right now because just of sort of the behavior of the market recently. We had a few pending trades. AMD triggered in doing very well, hitting the target today, which is great. And then we have these other two, Johnson & Johnson and Iron Mountain, which are setting up to trigger in as well, but both of them have earnings coming out. So, um, but this one's looking pretty good here. It's starting to clear all this prior resistance and real nice orderly pullback. This particular stock trades very orderly and consistently, and the only real caveat here, if this triggers in, will be that it typically doesn't move a whole lot, right? So with with about 2 weeks left ahead of earnings, um, it has the potential to just like trigger in and go nowhere and then have to get closed out. So we'll just have to see on that. But there's always the potential for that earnings run up. So looking pretty good actually. Let's see, that's really about all I have, because with earnings season here and the fact that we don't like to hold over earnings, um, and quite frankly, most of the stocks that look like they're set up would I have to just basically like nix them from being on the pending list, because there's no reason to get it. Now these have been on for a while, but other than that, there's no reason to get a stock on the pending list and get it in there necessarily. Now, the system may decide that because earnings season is kind of staggered, and so there's still a handful of companies, I should say, that are not coming out with earnings, but more than likely the new stocks that'll hit the pending list should start to hit, I would say, after their earnings come out, and the stock potentially has had a little bit of time to digest it. So we'll just have to see. But anyway, the main thing to keep your eye on here is, we didn't look at the Dow. Let's look at the Dow real quick, because let's see, here's the actual Dow index. The Dow itself is like right up against an all-time high too. Interestingly enough, the highest close on the Dow was right near the high of this day. So I think that the S&P and the Dow are both within 1% of their all-time highs. So pretty amazing, considering everything that's going on out there, right? All the all the problems with the supply chains and all the simultaneous crises that are going on. It's kind of interesting to see the market at an all-time high. Um, Pretty interesting, inflation. So it's interesting because you see these guys come on TV, and there's a lot of, there's a lot of talk. Everybody's seeing inflation. Geez, if you go to the grocery store, that's where you're seeing the inflation. And now that it's official, now that inflation is official, that opens the door for all these companies to raise prices more, because they can just blame it on inflation, right? So it's kind of so anyway, I don't know. I watched Paul Tudor Jones on CNBC this morning. It was a pretty interesting interview. He said inflation is not transitory, and he said that this current, all these current Fed members or whatever are making a huge mistake, because he thinks inflation is going to be a problem. And interestingly enough, he said that, well, there was a lot of stuff. I'd recommend watching it, but he sounded pretty cautious to me. And a lot of the stuff that he said, he's a legendary investor, and so a lot of the stuff that he said kind of made sense. And it's interesting, these how they tend to be cautious, the legendary investors. And so he pointed out a lot of issues with the current market, but the market doesn't care right now. The market is just vaulting right up to the highs again. So we'll have to see what happens. But anyway, so far so good on the swing trades. I know it's been a little bit light lately, but that's fine. Fine with me, because I mean, open trade hitting the target today. Couple on deck that are looking pretty good, and I'm pretty confident there'll be more on the way. So thanks for tuning in. I'll see you guys back here next week.